Welcome to LoanMajor. This tutorial is on the college selection calculator, which is used to compare financial aid packages after you're accepted to college. Unlike the college search, this gives a more precise estimate of your student loans. As you can see on the right of the screen, I have an example financial aid package from Northeastern University. Our hypothetical student, Jackie, applied to the school, got accepted, and we'll say this is her financial aid package. So first we'll enter the college name, Northeastern. She wants to attend a 4-year program with a major in special needs education because she's very caring. She's a dependent student, and she expects the price to increase by about 3% annually. The total cost of college is $67,957. Her expected family contribution from her financial aid package, from her FAFSA, was $15,000. As you can see, she got nothing in state grants. She got $40,900 in institution grants and scholarships from Northeastern, and we expect those to recur every year, so annual. Her federal grants were $3,770. She did not get any local scholarships, and she does not have any other funding. She was offered $2,200 in work study, but she's not going to take it because she wants to participate in more extracurricular activities. She'll contribute $5,000 of her own money each year. There's the option to customize it by year, but for simplicity's sake, we'll make it that annual. And her parents said they'll match half of what she pays, so $2,500, and that you could customize this as well. As you could see, the subsidized loans was $3,500. The Perkins loans were $2,000. And the unsubsidized loans offered were $2,000. The Parent Plus offered isn't listed on here, but it would, if the parents qualify, it would be this number, $15,159. Because that's the unmet need that hasn't been met by the financial aid package. We'll say her parents do take financial aid, and they take out $4,000 a year for her. You see, she still has a balance, so she's going to need to take out she thinks she's going to need to take out a private loan to finish paying for this. And we'll say that has an 8% interest rate with no origination fee, and she pays it to cover the rest of her schooling. She went on the starting salaries page of LoanMajor and saw that in 2022, she could be making around $44,000 as a special needs teacher. We'll click forecast. This is her total estimated loan, $66,000 when she goes into repayment after graduation. As you could see, if she sticks with the 10-year term, it's a little pricey because she'll be paying about 20% of her income. But if she extends out her loan terms by consolidating her federal and having a longer term length for her private loans, it'll go down and be a more reasonable percent of income. The trade-off, though, is that she'll be paying a lot more in interest over the course of those loans. So we're going to save these calculations because we have an account. And if you have an account, you could compare to other universities. So, for example, we're comparing this one to XYZ University, just a hypothetical one. You have more loans from XYZ, and the payments are higher, as you could see. You also have the option to change the private term length, and then this will reflect that as well, both the interest, the percentage, and the payment. And when you look down to the consolidated plan, this Northeastern is also still much cheaper, and she'd still be paying less in interest. So now, this is also down here is the Parent Plus loan option. This is how much the parents will be paying with that $4,000 annually they take out. So now Jackie has to make her final decision on whether or not she wants to attend Northeastern or XYZ, and it's worth the extra roughly $16,000 in estimated students' loan she'll have.